Hi everyone, this is AI Ryan voiceover on behalf of Bob Perez. In this video I'm comparing Thomas Wade's price action session from November 19th with how the same movements and structures look on my chart using my tools. We start the session with a modest early range and a small pullback that Thomas identifies as the first structure of the day. There is no opening sell-off here. Instead, price forms a higher low and begins to work upward into a developing bullish channel. Thomas explains that this kind of early firmness often leads to a broader move if buyers manage to create a clear two-legged pullback and a higher low. As the trend develops, Thomas points out the first major pullback and the attempt to continue the move upward. The pattern forms a two-legged correction that almost produces a second entry long, but the signal bar is too weak for his liking. On my chart, you will see that the bullish bias is active during this part of the session, and the HL markers appear immediately when the higher lows form. The structure is clean, but the pullback is not strong enough to justify an aggressive entry. A little later, momentum increases and price pushes higher, creating a stronger bull channel. Thomas talks about the rhythm of the swings and how the trendline is holding well. On my chart, the new high tags appear as the structure pushes upward, confirming that the bullish move is extending. The EMA also supports the trend, and the bias remains green during this period. Eventually buyers lose momentum and we begin a deeper pullback. Thomas notes that this correction is the most important one of the day so far. He watches for a possible second entry long, but the market does not give a clean bar. After the deeper pullback, sellers start to gain control. Thomas identifies a lower high and marks the beginning of a broader downtrend. From his perspective, the trendline break and the inability to make a new high are signs that the bullish phase has ended. As the downtrend develops, price forms overlapping swings that create congestion. Thomas repeatedly warns that congestion cancels most entries. On my chart, this congestion is visible as overlapping bars and a flattening of the bias shading. This helps avoid taking low probability trades in unclear structure. Later in the session, we get an overshoot of the downtrend channel followed by a push to a new low. Thomas explains that after an overshoot and a new low, traders should expect a test back inside the channel and possible traps. On my chart, the new low tag appears instantly, and the bias softens again. You will also see several counter-trend second entry long attempts forming near the extreme. These are not automatic buys, but they show that the selling pressure is weakening. In the final part of the session, price attempts a late bullish recovery. Thomas points out a higher low and subtle strength in the price action, but he is clear that the structure is not ideal for a major reversal. On my chart, this final phase shows mixed signals. The bullish bias starts to reappear, but the trend lines show that price is still within a broad corrective pattern. This visual contrast helps highlight why late-day reversals can look tempting but remain risky. Overall, this comparison shows how Thomas's reading of swings, second entries, and trendline breaks matches what my tools highlight automatically. The indicators show the bias, the legs, the second entries, and the new highs and new lows in real time, giving structure and context. You do have to redraw channels manually. If you want to see these tools in action every day Thomas publishes his videos, subscribe to the channel. And if you're interested in trying out the indicator suite used in this comparison, visit my website at thomaswadepriceactionindicators.com. Thanks for watching.